While retail investors were scrambling over coins, the whales were devouring the bars. Confirmation has arrived. A consortium of major industrial players, including tech giants and green energy manufacturers, has executed the largest physical silver purchase in history. They didn't buy paper contracts on COMEX. They purchased actual metal directly from refineries. This off-market transaction removed an estimated 10,000 tons of silver from global supply in just 1 week. The shelves aren't empty because of you. They're empty because the industry panicked. The raw material required to build the future has just been privatized by a handful of megacorporations. Tesla, for instance, understands that millions of EVs and solar roofs cannot be built without silver. It's the most conductive metal on Earth. There's no substitute. Intelligence suggests Tesla has secured a strategic stockpile to protect production against the coming currency collapse. They're exchanging cash, losing value, for silver, essential survival material. This is not speculation, it's strategic necessity. When the richest man in the world hoards the same asset you're buying, you know you're on the right side of history. Apple sits on a mountain of cash, but cash doesn't make iPhones, silver does. Every iPhone, iPad, and MacBook contains silver. Rising geopolitical tensions with China, the world's largest refiner, put Apple at risk. So Apple is securing massive tonnage to safeguard production, ensuring they can keep selling $1,000 phones even if the dollar collapses. This industrial hoarding sets a floor under the price. The price cannot crash while Apple continues buying. Global mandates for solar energy by 2030 add pressure. The solar industry alone is projected to consume 20% of annual mined silver, and with panic buying, they may have secured 50% or more, leaving little for investors. Samsung, Sony, and other global tech firms are doing the same. This is a global industrial panic, companies dumping fiat for hard assets. Industrial giants turning into buyers break the supply chain, effectively removing silver from circulation forever. Once it enters a factory, it does not return as a coin. For 3 years, the Silver Institute has reported a supply deficit. Consumption exceeds mining. We've been filling the gap with above-ground stockpiles. That 10,000-ton purchase likely wiped out the remaining strategic stockpile. We're now living hand-to-mouth. Every ounce mined is immediately consumed. No buffer exists, which explains why premiums are exploding. The just-in-time inventory model is dead. Companies now hoard years of supply, fearing currency devaluation and supply disruption. This shift from efficiency to resilience creates a massive one-time shock to demand. The vacuum you're witnessing is industry sucking vaults dry. The spot price doesn't reflect this industrial demand because these are OTC private deals. Premiums are massive. Industry will pay what it must, $100 or OZ or more, to keep billion-dollar factories running. This industrial demand drives the true price. The US Mint can ET compete because refiners prefer selling 10-ton lots to Tesla rather than small batches to the Mint. Retail investors are being squeezed out. The US government once had a silver stockpile. It's gone. The Department of Defense needs silver for missiles and torpedoes. If war erupts, they will seize whatever is left, potentially from you. Most silver is refined in China before shipment. China controls the bottleneck. They can tax, tariff, or ban exports. Western tech companies fear an export ban, fueling panic buying. This is a race against geopolitical time. The original silver squeeze was retail, coins. This is Silver Squeeze 2.0, corporate giants hoarding vaults. Corporations have iron hands. They never sell because the metal is essential. Industrial buying is permanent, removing float forever. Recycling isn't a solution. Silver is consumed in electronics and often lost. Unlike gold, silver is destroyed. Miners know Tesla is desperate. They may form a cartel similar to OPEC, restricting supply to raise prices. Selling cheap silver to Apple is illogical. They can pay double. Cash on corporate balance sheets loses 10 to 15% value annually, converting that cash into silver hedges inflation, turning a depreciating asset into an appreciating one, the Michael Saylor strategy with physical metal. This industrial hoarding will raise consumer prices. Cheap iPhones, cheap TVs, gone. The cost of raw materials will be passed on to you, fueling inflation. Industrial buyout leaves little for retail. The window to buy silver at reasonable premiums is closing. If you can still find it, buy it. You're buying the same asset Elon Musk is hoarding. As physical silver vanishes into corporate vaults, the paper market becomes even more unbacked. The paper-to-physical ratio will explode, guaranteeing defaults. You cannot deliver paper to a factory. Industrial demand will expose the fraud. We are entering a new normal of resource scarcity. Abundance is over. The nations and companies that secured silver in 2025 will dominate 2026. Those that didn't will collapse. 10,000 tons gone. The supply chain is privatized. Sold-out signs are structural, not temporary. The Great Silver Exit has accelerated from investment to industrial panic. If you hold silver, you hold the fuel of the future. Guard it. Remember the 2021 chip shortage that halted car production? 2026 will make that look minor. Silver is essential in semiconductors. No silver, no chips, no cars, phones, or missiles. This 10,000-ton industrial buyout is the first domino. Within 90 days, major tech companies will announce production delays due to supply shortages, a euphemism for, we ran out of silver. Stocks of unprepared companies will crash, while those who prepared will skyrocket. It is a reshuffling of the corporate deck based on physical reality. Behind the scenes, Silicon Valley is in full panic mode. Venture capitalists are quietly advising their portfolio companies to secure physical resources. They know that software eats the world, but hardware needs metal. We are seeing a rush of tech money flowing into mining stocks and physical bullion. This new wave of capital is sophisticated and aggressive. They aren't buying coins, they are buying mines. This institutional money is what drives a bull market from a trade to a mania. The global rollout of 5G infrastructure is another massive silver consumer. 5G towers require more silver than 4G towers. With a supply shock, the rollout is in jeopardy. Telecom giants like AT&T and Verizon are facing a resource wall. This will lead to a battle between industries. Who gets the silver? The car makers, the phone makers, or the telecom networks? When industries bid against each other for a finite resource, the price doesn't just double, it multiplies. This bidding war is the supercycle in action. Silver is also a critical antibacterial agent used in hospitals, bandages, and surgical tools. A shortage here is a public health crisis. We are already hearing whispers of shortages in specialized medical equipment. This adds a moral dimension to the squeeze. The government may try to seize silver to save lives, prioritizing hospitals over investors. This threat of confiscation for the public good is another reason to hold your metal outside the banking system. If they need it for hospitals, they will take it from ETFs first. This silver spike is the primary driver of greenflation, inflation caused by the transition to green energy. As silver gets more expensive, the cost of fighting climate change explodes. Governments have printed trillions for the Green New Deal. But that money is chasing a shrinking pile of silver. This guarantees that energy prices will rise, not fall. The green dream is colliding with resource reality. The result? Higher prices for everyone, everywhere. For a decade, mining companies were beaten down by short sellers. Now they hold the cards. We expect miners to start withholding dividends and instead hoard their own silver. Why sell it for cash when cash is dying? Miners will become silver vaults with mining operations attached. This hoarding at the source reduces supply even further. It is the ultimate revenge of the resource sector against the financial sector. In 2026, the stock market leaders will not be tech companies with high PE ratios. They will be resource companies with tangible assets. We are witnessing a great rotation from growth to value, from digital to physical. Investors who hold mining stocks and royalty companies will see gains that outperform Nvidia and Amazon. The market is waking up to the fact that you cannot eat code and you cannot build a future without metal. Economists argue that if silver gets too expensive, industry will switch to copper or aluminum. This is false. Silver is the best conductor. In high-performance electronics, switching to copper reduces efficiency and increases heat. In a world demanding faster chips and better batteries, you cannot downgrade the materials. The demand is inelastic. They have to pay the price. Substitution is a myth told by bankers to keep you from buying. Mexico, Peru, and Chile produce the bulk of the world's silver. These nations are watching the price explode. They are realizing that they have been selling their national wealth too cheaply. We predict the formation of a silver OPEC, a cartel of Latin American nations that sets the price. If they coordinate production cuts, they can bankrupt Western short sellers overnight. The power is shifting from consumers in the north to producers in the south. We mentioned recycling earlier, but let's go deeper. Most silver is used in trace amounts. It is microscopic. Recovering it requires massive amounts of energy and chemicals. As energy costs rise, recycling becomes less profitable, not more. We are approaching the thermodynamic limit of recycling. We cannot recycle our way out of this shortage. We have to mine it, and we haven't found new mines. The math is brutal and undeniable. When the price of electronics and energy skyrockets due to silver shortages, it hits the poor the hardest. This fuels social unrest. The cost of living crisis is actually a resource scarcity crisis. Governments will respond with price controls and subsidies, which only make the shortages worse. We are entering a cycle of intervention and failure that leads to a command economy. Prepare for rationing. Once silver breaks $100, it becomes a Velen good, a luxury item where demand increases because the price is high. It becomes a status symbol. People will buy it just to show they have it. This psychological shift fuels the mania phase. We are about to see silver jewelry and bullion become the ultimate flex, replacing designer bags and watches. Years from now, 2026, will be remembered as the year the physical world fought back against the financial world. It is the year the paper tigers of Wall Street were exposed. The industrial buyout of 10,000 tons is the smoking gun. It proves the shortage is real. It proves the price is wrong, and it proves that the time to act is now. As official channels dry up, the black market will expand to include industrial buyers. Factories will buy silver from scrap dealers and private hoards. The desperation will drive liquidity into the shadows. If you hold silver, buyers will be knocking on your door, literally. With the black market booming, the IRS will crack down. They will try to track every ounce. They will implement digital tracking for bullion sales. This is why privacy is your most valuable asset today. Buying now before the tracking grid is fully live is your last chance for financial anonymity. This industrial buying is the trigger for the final catastrophic short squeeze. When banks realize there is no physical metal to cover their paper shorts, they will panic. They will try to change the rules, but they cannot print metal. They will be forced to default. The bankruptcy of a major bullion bank is now a high probability event in 2026. The ultimate lesson: unbank yourself. The system is predatory. It steals your purchasing power and risks your deposits. By holding silver, you're opting out. You're becoming your own central bank. You're taking responsibility for your own future. This is the ultimate act of freedom. This is a call to arms for every saver, every investor, every citizen. The resources of the world are being seized by giants. If you do not secure your share, you will be left with nothing but paper promises. Fight back, buy silver, drain the vaults, force the truth to the surface. The industry took it all. 10,000 tons gone. The shelves are bare. The price is exploding. The game is over. You have the information. You see the reality. Now you must make the choice. Will you be a victim of the shortage or a beneficiary of the squeeze? The future is in your hands.